Hi, welcome to the Market Alert for Tuesday, the 16th of June 2020. So stocks jump, the dollar dumps as Fed non-news trumps second wave virus fears. And as it says here, this is madness. You're too right, it's been madness since 2008, but it continues and will do for a long time, especially when we see headlines like this. Stocks saw on report Trump planning $1 trillion infrastructure stimulus. We've already had this. As it says here, it's like deja vu all over again. You can't make it up. You really can't. And then, of course, to top it all, yesterday, the Fed says it's now going to start buying individual corporate bonds, which is just insanity as well, to go along with the junk bonds, the ETFs. The only thing they have missing from their portfolio of debt buying is stocks. And no doubt that they will start shortly as the stock market starts to move lower. And then, of course, interest rates will be zero and the Fed's balance sheet will be 10 trillion by the time we get to Christmas and end of year. So, yeah, the insanity and the madness, as it says here, continues. And it will do until the bubble bursts. It's as simple as this. Okay, let's have a look at yesterday. We'll start off with the Dow, and as you've just seen in the headlines, the market traded right off the 62% retracement that was drawn in from this low to this high. You can see their price is driving higher, and on the overnight, still moving higher, heading towards a close above the 200 bar moving average there. And in the 5-minute chart for yesterday afternoon, and at the moment I'm currently not trading the Dow because you're getting 50-point swings in the 1-minute chart up and down during the session. You can see this from the 5-minute chart. These red lines here represent 100 points, and you can see the first 10 minutes yesterday was massive swing, over 100 points down, 100 points back. And then you can still see the 50-point swings in this market, even though it's in the one direction of up, with the classic pullbacks as prices continue to move higher. This is the announcement by the Fed saying that they're going to buy the corporate bonds, individual corporate bonds. So there you can see the miraculous recovery on a few bits of news. The only one that has any substance is the Fed's buying the corporate bonds, individual corporate bonds, as opposed to this, which no doubt is a Trump tweet. And like I say, the madness is it is pure madness, but it's about keeping the illusion alive that everything is fine and we're going to have a V-shaped recovery from the coronavirus pandemic, which is complete BS, and we all know this. That followed the markets for the last 10 years. But here you see the overnight markets moving sharply to the upside, and from the low to the high we have currently 534 points to the upside. No doubt this will continue today. So have a quick look at the news for today. We've got claimant count change. This used to be formerly known as the unemployment figures in the UK. The previous was 865,000 job losses or new claims, and today at 7 a.m. it is forecast to be another 405,000 who have lost their jobs. Retail sales for the US out at 130. Wow, this is an encouraging one, isn't it? They're expecting a 7.9% rise, but given the manipulation of the non-farm payroll figures of the week, anything is possible. If you recall seeing that less than a week ago, just over a week ago. And if you haven't seen it, you want to have a look at it, because you couldn't make this crap up. You really couldn't. Core retail sales also minus 17 in that'll be April. May 5.5, but they have opened up the economy. That's going to be their excuse for fiddling the figures. And then we've got some jawbone in from Powell, which will no doubt support the market's narrative of moving higher at 3 p.m. So half an hour after the Dow opens. Watch out for Powell. Meanwhile, in the German DAX, again, really bizarre yesterday. But again, let's just start off with the daily chart. You see prices also coming down to the 62% retracement, converging with the 62% retracement back, measured back to the upside, and prices rallying off this, closing back above the 20 bar moving average and also above the 200 MA now. And in the 2-minute chart for yesterday, in the pre-market session, it was just incredible. We had 100 points there between the two red lines, 200-point drop. And then as the market opened, I've actually seen paint dry quicker than what we saw yesterday morning. It was just incredible. You know, all of the volatility overnight, and the market did absolutely nothing, trading in well, started out as a 7 a.m. as quite a decent range, and then it just narrowed and narrowed and narrowed, and the market just kept finding support at this level here off this BRN down here, which was at 11,600. And we had a couple of sell signals. That was actually the one, because by the time this one had moved down, it was still just below the scalp there, you can see. And then where the market hit the BRN, where we'd already got support to the left, you see the buying coming into this market. And then prices reversed and moved to the upside. But it took several hours before the market actually broke. Prices getting above the 200 bar moving average, and then coming back and finding support here as the market went into its mid-morning trading session. Prices pulling back, which you can see from here to here is 50%, and then you've got the support here as well, and then just drifting sideways, which you'd expect mid-morning or late morning, before we get into the Dow in the afternoon. Again, a bit of volatility here. You can see the volume increasing as the market tries to find its direction. There was a short here that was a losing trade. Took this one, the market went short, and then it did a straight reversal, stopping the trade out, and then back in on the second trade. But again, alerted by the fact that it just wouldn't close below the scalp. It's got to drive through before I start trailing, otherwise I'm out at break even or just a few points, because it isn't going to make any progress if it's not driving through the scalp, which I also term the first profit target. So prices then reverse, price bars turn green. We can see the retracement there, and then we head to the upside. And then later in the afternoon we get another signal, and you can see their prices doing exactly what you want them to do, driving through the scalp, the first profit target, and trading up towards the BRN there before finding some weakness. As prices start to trade sideways, you get a pretty good idea that it's time to leave the party, which I did on that one for 60 points. And then prices traded sideways into the evening, and then moved higher, of course, with the Fed, and overnight prices also moving to the upside with the Dow. So that's where we are for yesterday. Yeah, an interesting day. It'll also be interesting to see how the market reacts when it opens. We will have had the UK unemployment figures, or claim figures as they like to call them now, and we'll see how the market reacts to this, and also the other news that will be out later today. Okay, that's it for this one. As ever, thanks for watching. See you in the next one.